Hello and welcome to Wiki Pramami Hiraldaria. Joining us on the show is Mr. Anuj Kathuria, President India of JK Tyre and Industries, on the back of a spectacular set of numbers that the company has posted in the fourth quarter. Welcome to the show, Mr. Kathuria, and congratulations on the numbers.
Thank you so much. Thank you for having me on the show.
Always a pleasure. Mr. Kathuria, if you could help us understand what has led to this kind of a strong performance delivery and even the kind of improvement that we've seen on the margin front.
Yeah, so thank you for asking that question. We ended this year on a high note. Our total revenues were at 14,681 crores, which is the highest ever for the year. And even for quarter four, we had revenues which were at 3,645 crores, which is an improvement of 10% over the corresponding quarter. Also, our EBITDA numbers, we got into the double digit. And as compared to the corresponding quarter, we saw an improvement of almost close to 360 basis points. So this has been possible on a strong demand. So the demand for the tires, both from the replacement as well as the OEM, was strong, both in commercial vehicle segment as well as in the passenger car segment. Also, what we had seen is that, we had a very volatile 2 years in terms of raw material costs. But then in quarter three of last year, we saw some stabilization. And in quarter four, there was a certain softening also that happened. So both combined together, including the other initiatives that we had been working upon on controlling our conversion costs. So everything put together has helped us get to this level of margins.
Right. So, Mr. Kathuria, is this something which is normalized from here on and achievable in the coming quarters as well? Or do you think it'll still stabilize at something lower?
See, India has a strong story. The GDP in the coming year, FY24, is expected to be at around 6.5%. We have already started the year. So here again, if on the back of a strong GDP growth, we should expect that the overall industry, and especially the automotive as well as the tire industry, should be doing well. We expect that we should see a double-digit growth for the industry. And we have been making our best efforts to grow a little more than the industry. So overall, I expect that we would be able to have good growth across the segments. Commercial vehicle segment is looking quite buoyant. Even the passenger car segment, even in quarter one, we are seeing that the orders that we are getting from all the OEMs is very robust. And we are operating our passenger car segment, the manufacturing plants at peak capacity utilization. So we expect that going forward, we should be able to sustain this demand. And if the raw material prices were also to remain stable, then actually the quarters that we are in and the ones that are ahead of us, we would be seeing a strong performance there as well.
Right. So overall, as we know, from a business mix perspective, almost 55% of our revenues come in from truck and bus radial tires. Around 28% comes in from passenger, whereas the remaining 15 to 17% is from two-wheelers, three-wheelers, and others. Now, the expectation in the industry is that the two-wheeler and the three-wheeler space is expected to pick up from here on. How are you seeing that segment's contribution to revenues? Because right now it's only 4%.
Yeah, I understand what you're saying, but the segments of truck and bus are also expected to grow at a good rate. In fact, if I were to compare it with the pre-pandemic levels, I think both the passenger car segment, which is already at pre-pandemic levels and it is expected to grow further, the commercial vehicle would be coming back to the pre-pandemic levels in FY24. The only segment that we should not be expecting to grow back to the pre-pandemic is the two, three-wheeler. But again, we have to watch the rural demand very carefully. So here, as you know, that we have on the two, three-wheelers, while our overall presence is limited. But as of now, our capacities are being utilized to the maximum. We are able to utilize the capacities based on the orders that we have from the OEMs, especially in the motorcycle segment, and also certain three-wheelers segment that is also kind of coming up strong. And the other scooter segment is also should be performing well. So we have a certain capacity and we would be able to utilize our capacity to the maximum.
Right. So overall, what's the kind of growth that we're looking at from a volume perspective in terms of FY24, and taking into consideration the pickup in volumes across segments and the recovery that's coming in the MHCV segment, by how much do you think will we improve our revenue and profitability?
So, we are seeing that the overall growth in terms of volume, we should be expecting anywhere between a 10 to 12% improvement in the volumes. And this would be coming across the segments, although the percentages may vary. But we expect that generally the commercial vehicle segment will grow at a slightly higher rate as compared to the passenger car, because passenger car growth last year was quite good. So overall, I think so. All this will definitely result in a overall top line growth for us, and as a result of that, we can also see the improvement in margins.
So would it be right to say that we would see double-digit revenue growth, which could be, say, mid double digits or higher double digit?
Very difficult to put a finger over there as of, but we expect that whatever would be the industry growth, our endeavor is always to grow a little more than that.
Right. And overall, in terms of the replacement demand as well as the exports, how is that part of the business doing?
So the replacement demand has been quite good. In fact, there has been a growth in the replacement segment as well. Although quarter four, on a corresponding quarter, the quarter four of FY22 was a strong quarter. So, but still we saw further growth over that quarter. And quarter one, the quarter that we are in, is generally a very strong quarter for the replacement market. So here again, we expect that even in the quarter that we are in, we should be seeing good growth coming in. As far as exports is concerned, yeah, it was a little subdued in quarter four. There are a certain, because of the global geopolitical situation, there are a little bit of headwinds that we are seeing. So our revenues in quarter four in exports were a shade lower. For the year as a whole, we were able to keep it at the same level. The difference was within the range of 5%. But going forward, I think so there will be normalization. We expect that the demand in the markets that we cater to, one of the markets that we have a good presence is in the US, especially in terms of both the truck and bus radial as well as the passenger car radial. So there again, once the demand starts picking up, we should be able to improve our overall exports. And we expect that by the second half of this financial year, the demand should be normalized and we should be back to the numbers that we have been doing in the recent past.
Right. And my last question coming to you is on the debt side of it. We've repaid some in this quarter. What's the outlook looking like? How much are we looking to repay? And any other capex that we will be incurring in FY24?
So let me answer the capex question first. So we had announced these capacity expansion program entailing a capex of 800 crores. So those are being progressed very well. And we expect that, the output from these expansion programs, whether it is the truck and bus radial or even the passenger car radial, this should be start playing out in the second half of the financial year. And by the end of the financial year, or at best by the first quarter of the next financial year, both these programs should be commissioned completely. So that would be the 800 crores of capex. Further expansion programs are also being examined, and based on the understanding of the demand in the market, we would be examining those. And once we finalize any of them, we would be definitely sharing it with you.
Right. So I
The
think,
on the
yes.
debt reduction, we have been able to reduce our debt levels. They were last year they were a shade under 5,000 crores. We
Hmm.
have been able to bring them down to a level of 4,500. But this effort is going to be continued going forward. But again, we have certain other uh, expansion programs that are coming up. So that will also, part of that will get financed through debt, part of it which will get financed through our internal accruals. But as a combination, our efforts would definitely be to constantly keep on lowering the debt levels.
Right. So I think a good roadmap ahead from here on as well. And once again, congratulations, Mr. Kathuria, for a fantastic performance that we've seen in the fourth quarter, and looking forward to much more like this. Thank you. Stay safe and speak to you soon again.
Thank you. Thank you very much.